Hello, everyone. I'd like to call the Finance Committee meeting to order at 4 p.m. And we'll go through the roll call in a moment. Let's see. I'm here, George Savage, and Stephen Casani. Here. Kenneth Levine. Here. Chris Rittler. Here. Michelle Takai. William Urban.
Here.
Mark Wacer.
Here.
Ah, brilliant. And remotely, by the way. And Mark, can I confirm that you'll be taking notes today?
Yes, I will do so.
Okay, great. Thank you very much. And I'll try to keep notes too. Maybe we all can too, because there's an extra challenge since Mark is remote today. Let's see. Moving on to item 2, this is the opportunity for oral communications for items not on the agenda. Anyone in the room or online? Okay. Betsy, do you have your hand up? For some reason, I'm not seeing.
Yes, I have my hand up.
Okay, yeah, it was being masked by some thing in my screen here. Please go
Yeah.
ahead.
Thank you, George. Hello, committee, and thank you for your attention. I just wanted to confirm, first of all, I sent a letter out this morning at 11 o'clock. And if there are any committee members, finance committee members who did not receive the letter, I'd like to learn so I can get it to you by other means. Or maybe someone can help support me in that. But if I don't see anyone nodding their head, I'm going to assume you have it. So for the benefit of anyone, pardon me?
No. Did you send it to George?
Yes, I sent it to George,
Yeah, I got it earlier today.
but I sent it to George and I sent it to the finance committee address at the town. And then the town needs to forward it to you if George did not. So I'm sorry. I will give you a high-level summary as I don't have a lot of time in oral communications. But between the town and George, since I don't have most of your email addresses, they will need to get it to you. I think it's an important letter. It's 3 pages with considerable detail. So I'm just going to go for the high level. Between October 2023 and May 2024, 15 town checks were unaccounted for and missing. The missing checks are noted in the letter by check number, and the time frame is also bracketed, as none of them occurred within an individual warrant list, but they fell out between warrant lists. After making that discovery, I felt the support of members of the Finance Committee was important corroboration. Bill Urban and George Savage were helpful, and in a previously scheduled meeting with the Finance Director, George submitted the request for information about 5 of the missing checks. Those were the ones all within one pay period. Within one period between the warrant lists of approximately May 3rd and 15th, it's noted in the letter. In approximately 4 weeks, Town Finance Director reported back to George, and that was sometime last week, that those 5 missing checks were dummy checks and had been meant to test a new vendor. They have since been voided, as I heard. We're now awaiting, as of this morning, we're awaiting the town's documented response to the whereabouts of all 15 missing checks, with backup details about each, including how they were dispersed and a request for a response by this Friday. The clarity of documentation will accrue to some important improvement in what is currently shaken confidence. I'd like not to have to pursue this any further. The letter concludes with 4 specific concrete requests, that being the first. The other 3 are necessary foundational practice improvements necessary to provide a level of oversight that we have been sorely lacking. George, I know, has the letter, and as I've been working with Bill, I know he has the letter. If you want to elaborate on that with the committee, I invite you to. I think it's critical. And these are ideas, many of them which have come up here before and have yet to see implementation. Thank you so much for your attention and time today.
Thanks, Betsy. I've received the letter. I haven't read it yet. I'm familiar with the topic and I will forward it to everyone after the meeting. Thank you. Dale Fow, I see you have your hand up online.
Great. Thanks, George. First, I want to compliment the subcommittee on the expense reduction working group. I think it's a great document, a great starting point. But I didn't see it on the agenda anywhere, so I'm questioning what is the status of the request that was in the minutes from the last meeting for the town manager and finance director to provide a balanced budget to the town council during the month of September. Furthermore, I am still wondering when we can begin to see cash flow statements and spending versus budget to the year. I will no longer tolerate the statement that we haven't had an audit, so we don't know. That's a useless, crazy statement to make. It's a very easy thing. Probably 500 residents in this town could come up with a cash flow statement and a spending budget if they spent a couple of days. So those are my questions. Thanks.
Thanks, Dale. I think some of that will get addressed today, hopefully. Anyone else? Okay, not seeing anyone. I don't know that we have any announcements or presentations. Can we approve the minutes of the June 11th meeting? I have a motion to approve that. Any second? Second.
I would like to
Yep,
add a question.
sure.
On the second page where it talks about the Finance and Audit Committee recommends that we do something that we ask the town council. The second part of that statement says that we request that the town council, that the town fund balances be recalculated on a quarterly basis rather than presently, which we do annually. Well, I don't recall that second part being part of our recommendation. So I'm asking whether anyone else does besides whoever wrote these, which are otherwise very good minutes.
Yeah, I thought we did, but
We definitely discussed.
I think that was the sense was, again, we don't set policy, right? It was a request for the town council, our recommendation that they recommend that the staff present a fully balanced budget in September, just as an exercise. And also recalculate our fund balances regularly. And I should just stress parenthetically for those listening that by this, we don't mean the cash balances, those we know at any given moment, you know, you have so many dollars in the bank. It's more the allocations of, given all the funds movements and which funds are allocated either by law or by council sort of direction for various uses, which are unallocated funds and which are supposed to be held in reserve.
That just isn't my
Okay.
memory. It doesn't include that second part.
Okay.
That's
I leave it open to everyone else. I don't, I know we discussed it and I thought we recommended that. But I can't say.
We could accept it as is. I'd just like to reopen the issue then.
Okay. All right. A second on the minutes as written. And a second on this. Anyone second? Okay. Second in favor? Aye. Opposed?
Aye.
Okay. All right. Minutes are adopted. Super. We'll proceed with the agenda. Thing I want to start before we get into new business in the audit, whatever, is just hand it over to Sharif for some introductory remarks, and then we'll get into the three items that we have here. Sharif.
Thank you, George, and thank you, Finance Committee. As you can see, you're in very capable hands with Tony McFarland here. He's sitting at the big kids table now, and I'm here at the kids table. So I wanted to just make a couple comments. Thank you to the Finance Committee for all your work and your help so far. I wanted to thank the work groups for all their effort and their time they put together with this. You have met multiple times and asked for multiple information from Tony, which he's been able to get to you. And as you know, we're here today because I, as your town manager, have been asking for your assistance on how we can move forward with our structural deficit and moving forward. We have our Chris report to guide us, and we have Tony here. And so I'm very confident and very pleased with where we are in our process moving forward. And while the work groups have been very busy meeting, we too, as staff, have been very busy meeting in the month of July and August as we prepare for our September revenue discussions. And in order to address our structural deficit, we've made some immediate changes within Town Hall and our government. We're making some changes at the September revision moving forward. And then a lot of the other changes will also take multiple years, as an example, through some of the recommendations that not only you will make, but staff will make together for the upcoming fiscal years, if you will, moving forward. And Tony has made a significant impact since he's been here. He's hit the ground running. You remember his first day was an actual finance committee meeting, and hasn't let off the gas since. But since then, and Tony will go into detail on some of these things, but he has set a timeline with our auditors for all 4 fiscal years to get caught up in 4 fiscal years within the next 12 calendar months, which I'd like to make sure that the community and this committee and council understand that's an unbelievable feat. That's unheard of, to do 4 fiscal year closes and 4 fiscal reviews in 1 calendar year. And so very happy that in very short order, we'll be able to get caught up on those audits. And that's something that, we have been clamoring for and the town has been asking for a very long time. He continues to address and identify multiple process improvements as he talks with his staff and conducts his meetings within not only finance, but with the different departments. And he's also recognized some accounting errors of things that we've recorded over time, whether it be a liability and how it's recorded or our payroll adjustments, how they're recorded. And those errors, if you will, have been in our favor, if you will, on how we record moving forward. And then also, you'll hear him talk about today about how he has posted and we're now receiving bids for our user fee study and our nexus fee study. So that's in the works, that's in the plans, and basically by the end of this year to have a nexus fee and user fee study in hand, which will be very helpful for us to set our rates, set our fees, and understand our models moving forward. I also wanted to point out that, it's very nice to see some of the recommendations that are going to be discussed today are exactly what we've been talking about in town, not only from myself, but also from our leadership team. My plan was to discuss many of these recommendations at my town manager coffee next week, which I believe is the 28th at 10 a.m. But then also talk about this on September 11th, which is our next council meeting. And at the September 11th council meeting, I was going to give a town update, if you will, calling it the state of the town, which I did last time. And we received some really good feedback on that state of the town. That's basically getting the wheels in motion for the major discussion of the September revise on the 25th. So we're not just going through the summer months cold and, reestablishing that September revised discussion. We'll have talked about it a couple times. Not only are you meeting 2, 3, 4 meetings before the budget, I'm also meeting with council and with the community beforehand. Some of the decisions that we've made is I have already taken off and pulled the sheriff's annex off of the budget. That's not going to be presented in September. That's $600,000 right off the bat. We're also putting on hold, if you will, some of the other CIP projects, such as the soundproofing of Town Hall, some of the badging system, security system for the town center. One of the things that we are continuing with, a small item, is the agency car. Our little Nissan Leaf has gone kaput. It does not charge anymore. We get maybe 15, 20 miles on it. And so we're looking at getting a used vehicle for less than $40,000 for the town. But other than that, all of the major projects within CIP are either on hold or have been deleted, if you will. The next piece is that I have frozen and we most likely will be removing 2 positions from the town's budget. One is the building and planning manager, which was a new position that has not been recruited for and we're not hiring for. Not a new position as in adding, it was a new position that was revamped from the vacancies that we had. And the second position is an administrative analyst position, which we will not be hiring for. So those 2 positions off the bat will also help our financial bottom line. Another piece that we've talked about in many different arenas and that will be talked about here on the financial side is on the program side. We have Terrence Grindall, our interim planning and building director. We have John Biggs, myself, and Corey especially. We're looking at a new building and planning model, if you will, service model for the town moving forward, because what we have now currently isn't working, and we want to make sure we revamp that. I've incorrectly and casually called it the Tom Vlasic light model, which is basically having some sort of permanent staff, whether it be one or two permanent staff like your director, then along with a consulting team or group that provides the services for the town. So a hybrid RFP out for services for the town along with staff. So both together, because I don't think you can contract the entire building and planning department out. I also don't think it's working to have the entire staff model in-house because of staff turnover and or changes that occur moving forward. So more to come on the building and planning model as we work that out. And then just looking at other efficiencies and reductions all over our staff operations, including our public works department, where we're looking at how many folks we have in consulting there. We're looking at obviously our legal fees. There's only 3 places, and you'll look at those tonight, which is basically your staffing, your consulting, and then your other services. So we're taking a look at all of those things internally as well. By doing all of this, I do believe that we have significantly decreased our deficit amount, if you will. I came to the table, I believe we were talking about like a $1.8, $1.9 million deficit. I believe now that would be less than $1 million as we move forward, probably $800,000 or $900,000, and we don't have the exact number yet. But the punchline that I have come to, the conclusion as town manager and staff, and I think many of us have come to, is that we are not going to just cut our way out of this. We're not just going to expense our way completely and get to zero. At the end of the day, our sheriff's contract's still going to increase. Our CPI increases, our cost of living increases moving forward. And so when we have our finances in order, when we have them so that the reports have integrity and that we're in place, I truly believe we can then ask the community for some sort of revenue measure moving forward. But we're not asking the community to solve for inefficiencies or solve for integrity. We're asking them to solve for basically what is the sheriff's contract. At the end of the day, in the last 3 or 4 fiscal years, you cannot sugarcoat $1 million increase in one swoop to your sheriff's contract and expect to move forward. And so I think we'll, naturally come to that kind of conclusion at some point, but that's why finance committee is here. That's why council is here. And so we'll continue to move forward on what I can do as town manager, what Tony can do and leadership team, get the recommendations from finance committee and move forward in the next coming months. One last piece is that, as George mentioned, we know exactly how much money we have in the bank. We know where it goes. We know what's happening. What we don't know is that unallocated fund balance number, that number that we have that's unallocated for city council to say we can allocate this number for certain purposes. And that's a black box, if you will, because of those 3 years of financial audits. Once we have those financial audits in place, then we can say what that number is. So I would just caution when finance committee talks about, the $5 million that we have or the $4 million that we have, that number can move. And that's why you've heard Tony mention he cannot commit to a number to say this is how much money we have in unallocated fund balance, because as we get closer in each year that we close out, we'll know exactly what that number is. So then we can go to council and say, council, here's your number and how do you want to allocate it? So just wanted to thank you and literally passing the torch to Tony. I think his work speaks for himself. We're very excited to have him here. And I'm, literally passing the torch and physically leaving so that you guys can have your meeting and conduct the business. And just thank you for all your help, because there's not one solution to all of this. This is a hybrid solution. We'll come up with different ideas and endeavors moving forward to solve this, but I'm confident that we can do it as a group. So thank
Great.
you.
Thank you very much, Sharif. I'd just like to make a couple of introductory remarks, and that is just about the nature of the process here. This is going to be the initial report out of small working groups, sort of 2 by 2 members of the committee who have done some work together over the summer and are presenting their initial ideas from their area of operation. The rest of the committee hasn't seen any of this stuff until we just put the packet together end of last week. As the reports came in, we're hearing all this for the first time so that the meeting's held out in public. So these aren't firm recommendations of the committee. They're not any kind of policy for the town. That's set by the town council after much deliberation. So this is the first round of small groups reporting to the bigger group and the public all at the same time of what they've been working on, and then we'll all react to it and make progress from there. So just want everyone to have context on the reports. With that, we should start, and I'll hand it to Tony here, who's now a veteran of maybe 3 months now in Portola Valley, to give us an update on where we stand with respect to the audit, of course, and the rest of the financial turnaround really in the town government.
Yeah, today is day 90. So, So yeah, just an update on the audits, that Sharif had alluded to in his opening remarks. I met with the auditor and we did come up with a time frame for completion of the last 3 fiscal year audits. And that by the time we're done with that, we'll just roll into 24, 25. But it starts with, by the end of this month, having everything turned in for 21, 22. They've promised to turn things around as long as there's no major hiccups. Hopefully by December, we'll have 21, 22. In November, we'll be turning in the 22, 23 prepared by client list. And they'll have another couple of months to turn that around. And then they asked that in April, we have 23, 24, so that we can have the 23, 24 audit adopted by council in June. And then at that time, they'll start their interim field work for 24, 25, and we will be up to date. And as far as the fund balance number, I believe once I get the 22, 23 number finalized, we can build 23, 24 and have some type of fund balance number by the second half of the fiscal year. But again, that's no major hiccups with the number that we're putting together right now. So, staff's on board. The auditors are on board. They've made some promises that if we meet those deadlines, they will meet their deadlines. And then we'll have all 4 audits completed by probably September of 2025. And we'll be up to date, good to go. But it is a very ambitious plan.
Got it. Do you see any particular risks to the plan?
No, I think we'll just build off what we did with 2021 and then move forward. And there's been no major issues other than the accounting entries that I've done that need to be corrected.
Okay.
And but as Sharif said, those are actually to our favor.
Oh, okay.
I might have missed it, but when will 22, 23 be ready for town council meeting?
22, 23 will probably be March.
Mark?
Yeah.
And that's, you said then you would have more confidence of forecasting the actual
Right,
fund
well, we're
balance.
gonna have those numbers into the auditors by November.
Right.
So I can go from there to build in 23, 24, and then come up with a reasonable number that will be a lot closer than where we are right now.
Okay. Can you fill in for me? What was the report at our last meeting? I thought that 22, 23 was going to be completed around December, January timeframe, but I may be
Yeah,
wrong.
that was the schedule before I started. So now I'm here, we're gonna have 2021 next month, but we're still putting 21, 22 numbers together. So that's kind of pushed things back, but we're still gonna plan to have the entire 3 years caught up before the end of this fiscal year. And then we'll be then doing the 24, 25 audit when we're supposed to be doing that.
So can you explain why the delay of a few months here is?
Well,
And do you
it's-
expect that to occur again?
No, I don't expect it to occur again unless something comes up. But part of it was me getting on board and getting the staff up to date and just where are we with this and what needs to be done. There were still some assessments I needed to do. But you know, it did delay the process. But I mean, like I said, today's my 90th day. So.
Tony, question for you, so I understand the issue with fund balances. I'm presuming that we have many of our funds where the monies are commingled. In other words, they're not existing in separate account numbers at the various financial institutions representing each of the, 40 odd, whatever number of funds there are. Is that correct? There
You
there
are
may be a few
correct.
exceptions, but there.
You are correct. All the cash is pooled within the separate institutions that we have, TechCU, Bank of America, Late, and Schwab. However, the funds, they're all accounted for in their separate funds. the big one is the general fund, and the general fund is the one that we're behind in posting revenue for 2 or 3 years. But it's that number, the unallocated reserve, that's the foundation for all financial planning, all budget planning, because that's the number we know that we can work with. And that's the number I don't have.
Thanks.
Any other comments on the committee side? Do you have other things to talk about on this item?
Just that we have 2 consulting firms that have notified us that their intent on to submit an RFP. The deadline was the 14th, but that wasn't necessarily telling them, hey, if you haven't told us, you're not included. So we've just had 2 firms say that they're considering putting in our proposal.
And what's that for?
The fee study.
Oh, the feast.
Yeah, there's a couple more that I would anticipate seeing. There's the cast of usual suspects of these consulting firms. I am relatively, yeah, it's just gonna, yeah, because I mean, they've all done these studies, so they all know what they're gonna be doing. And part of the process is we're gonna be talking to them, what it is that we're looking for specifically. And they've all been doing this for years. So it shouldn't be but yeah, it'll probably come down to top.
And before I open comment to the public, Mark, do you have anything to add?
No, I don't.
Okay, great. Feel free to break
George, I
in.
have one more question.
Okay, yeah, great.
Going back to the fund balances for a moment, Tony.
Mhm.
We've spent a lot of time in the past worrying about OPEB and pension liability. And we decided to always, the reason those 2 fund balances are right down to the dollar
Right.
is because that's what we're told by CalPERS, I guess, as to what those numbers are. Have they been updated recently?
We are going to be getting a OPEB valuation next month. So we'll update the number when we get that valuation report. The unfunded pension liability, we get an annual valuation every month. We should be getting one either July. We probably should be getting one very soon. And then those will be updated for 22, 23.
So the number that's there now for the pension is just a couple months ago.
It's probably dated.
It's years.
Yeah, I haven't had a chance to look at all. I mean, I'm still going through line by line on the general ledger. Haven't gotten down to the valuations. I know we have an OPEB trust set up, and our pension liability is fairly minimal. But I haven't really had a chance to look at the valuation report and see how it's reflected in the pension, in the statement.
Yeah, it was minimal the last time they gave us the number,
Yeah.
but that was some time ago.
Right, but they had a very good investment turn this year, so
Good.
hopefully that'll work out in our favor.
Thank you.
Members of the public, questions on this agenda item before we move on? I see a hand. Caroline.
Great, thank you very much. Can you hear me?
Sure can, yes.
Great. Thank you very much for this meeting. I think I can echo the many disappointments from many people. We seem to get procrastination after procrastination. And at least I was hoping that today we would have some numbers. I'm hoping that the Finance Committee can push this a little bit more. Unallocated funding for 3 years. We have paid consultants. I hope that this Finance Committee is not approving the same auditor that we used to have, because what have they done all these years? Very disappointed in the presentation today, so thank you.
Thank you, Caroline. Well, one thing I just will point out to everyone listening is that the Finance Committee has 2 more meetings scheduled. I forget the dates right now exactly, but in September. So we're going to be having 3 meetings within the span of about a month, realizing there's a lot to get through and people experience meeting fatigue if we keep going too long. So we will be getting to a lot more of this, including the September numbers.
Yeah, if I may correct my comments, it was not directed to the Finance Committee. I really applaud your efforts. I was more directed to the Finance Director and the Town Manager. I don't understand that we keep getting the same presentation over and over again. I would like to have more details. And again, I don't think it's acceptable to now hear that that audit 21-22 will be in March 25. Thank you.
Okay, thank you for that. Anyone else? All right, hearing no one, we'll move on to item B. And the next item up is, this is on general fund reserve policy discussion. And I think this is something that, Bill, you were working on together with, I forget, well, with you. Yeah, great, with Chris. So maybe you guys can tell us about that.
So there's a couple of ways you can proceed. We have a 3-page report with recommendations and our thoughts and justifications for making that recommendation. That's in the packet. I'm happy to give a very brief summary for 3 or 4 minutes about the highlights from that, and then invite comments, questions, discussion from the committee here. Would you like me to do it that way?
Yeah, I think that would be great, just to set the context for people who haven't read it, particularly in the public, and you know, what it's all about, and then summarize the findings, and we'll talk about it.
Okay, so Chris, jump in on any of these points as I go through them. I'm going to work through it fairly quickly. Just to state, our current general fund reserve policy is that the general fund minimum unrestricted fund balance shall be maintained at or above 60%. And 60% is measured against the general fund unrestricted fund balance against the adopted fiscal year budget general fund. That's been the policy for at least 15 or I think maybe 20 years. Our proposed revision would change that to say that the unrestricted fund balance shall be maintained in a range of 25% up to 60%, measured in the same way. The difference here is we're no longer proposing that we try to have a policy to maintain above 60%. We think a range from 25 to 60%, anywhere in that range would be adequate. One of the things that motivated us is our concern about the opportunity cost of having excess reserves, in this case above 60%, is a cost to the town. That money is not being used for services or other town features. It's also very difficult, as we all know, for the town to earn a competitive rate of return on our fund balances because of the restrictions we have under the California government code. And it's very hard even to stay ahead of inflation. We also believe there may be some other sources we could tap in an emergency. I'll maybe touch briefly on those. The way we think about this, the 60% would be a soft ceiling, meaning that the balance was above 60%. We're not mandating or suggesting any action needed to be taken right away, but the 25% would be a hard floor, mandating certain activities. Among them, one thing we state here is a mandatory joint working session between Finance Committee and Town Council to, for the most part, come up with cost-cutting recommendations in the short term. Fundraising in the short term is a much harder proposition. We state that the purpose of a reserve policy is to buy time to solve what might be other budget imbalance issues or deficits. It's not a big reserve we don't think should be used to fund ongoing deficits that can't be sustained. We have a couple of specific recommendations regarding how often we calculate it. We've talked here earlier already about moving to a quarterly measurement. I think ideally, if we get back to having monthly financial reports, treasurer's reports showing beginning balances, ending balances, ins and outs, it's going to be fairly simple. And I see Tony nodding his head that it could actually the spreadsheet could calculate that on an ongoing basis for it every month. So that's probably something that will fall out of all of this. I think the other thing to point out, and Tony, I had, or not Tony, Chris and I had a bit of a discussion about this is, in the case of a severe fiscal emergency or a natural disaster or something that would strain the town, regardless of what our policy is, what are the sources? One of the things we don't know enough about yet, we pointed out in here that it's something of interest to us, would be the access in case of a wildfire, earthquake, FEMA funds, how those can be obtained, how much can be obtained, the process for doing it. And we thought a little bit about the experience that many of us on the committee remember back in the late 1990s when we had the El Nino floods. I think we had about between $4 and $6 million of damage to roads and buildings and structures and so forth. I think at that time we actually did go and get sources of funds to pay for that. It'd be interesting to take another look at that and look what we did then. I don't know what's available now, but that's something that we should know before obviously we hit some kind of a natural disaster. So that would be a recommendation for a little bit of future research. One additional thing we pointed out in here, and we thought it might be a sensitive point for some, we pointed out that we have some restricted funds that have very large balances. The biggest one is the open space fund. There's also inclusion in lieu of fund. One of the questions we asked, we did not recommend going this direction, but we wanted to know what the answer would be to the question of, are there any conditions under which monies can be taken or borrowed from a restricted fund in order to provide funds needed in the general fund? And the answer to that is a qualified yes. It is permitted under state law. There are some fairly stringent requirements for the payback, how you document that, the process to do that. We included a link in our paper to a case study, comes out of the town of Lincoln, northeast of Sacramento, that did this 4 or 5 years ago, and in some ways did it correctly, in other ways made some mistakes, and it's sort of instructive for us. But we don't intend and we don't propose that we would ever go into that fund. But if we got into an emergency where there was no other source, and regardless of what our reserve was, it wasn't adequate, there is a way in which a temporary borrowing, or perhaps up to a year, could be used to buy, again, additional time to come up with other sources of money, be it loans or a ballot proposition. That gave us some confidence that reducing the policy to a range of 25 to 60% rather than a minimum of 60 would be a prudent thing to do. We're not really exposing ourselves more greatly than we otherwise would because of that escape hatch if we ever really needed it. So, did I miss anything, Tony?
I would add, no, I think we covered it well. I would add the recommendation for modification to the reserve fund is really to help deal with what I consider the lumpiness of revenue and the lumpiness of expenses. So if we hold fast on 60%, and we just happen to have a low revenue period and a high expense period, the 25% period is that hard floor is meant to get us through that. It's not meant to be a multi-year help. It's meant to be a within the year help. Further, the concept of taking loans from a restricted fund, same concept. Shorter term, less than a year. Bill did some good research on that. That just says, hey, look, revenues came in lower than expected. Tax revenues. They came in lower than expected. We've been managing expenses. We expect them to turn. So we will, we'll use that hard floor 25, but we might need to take a loan from ourselves to bridge with the goal of getting back, right? This is not meant to be long-term depletion of funds or long-term resetting to 25. think you got it.
And Bill, am I correct, or Chris, that this is linked to also recalculating that balance more often than we've been doing?
Yes, our recommendation is we recalculate the balance at least quarterly, but as we noted and Tony was noting, we think that's actually gonna be able to be done monthly as soon as Tony finishes his work. It should be something that can fall out of the.
It
the
should be
update.
a report you receive every, it should be. And I mean, it's seriously, I mean, I agree with everybody's concern and yeah, if you don't see this report, it just creates uncertainty. And it's something that should have been presented to council and the finance committee on an ongoing basis. And that is my ultimate goal, is to get to that point. I already have the framework of the spreadsheet in place. And it's a report that I used to prepare for other cities. And it's something that this town should have had a long time ago, to be quite frank.
So you pointed out that revenues are monthly. December and April being the big positive month.
Correct.
Have, in the past, the 60% was always calculated on June 30th,
Right.
or balances.
Because
balances as of
that
June
is,
30th.
that's the practice that, I mean, every town does, every city does the same thing.
Right.
Yep.
So have we calculated what the balances would be on a monthly basis historically?
I believe so. I haven't seen any reporting whatsoever. I mean, I've been going back year to year to year. But I have not seen, that type of treasury report, being delivered to the town.
This predates Tony by a lot, but I actually have a 2014 monthly treasurer's report that I dug out that has, in fact, it had,
Ratio?
pardon?
The ratio or just the?
As the ratio, shows for each account, including the restricted funds, what the account balance was at the end of each month. It also shows for the total across the town, all accounts, the starting balance, the total receipts, the total disbursements, and the ending balance. We had the system at that time. This is 2014, 2015, 16. I remember using it because I was interested in exactly what we're talking about now, which is, the revenues and expenses fluctuate, but the big drawdown is between when you receive the end of April property tax payment from the county and then 8 months later in December. So, if you look at it on a graph, your cash is running down pretty rapidly from April, December, and then you get a big bump and then things are easier in the spring. And it was possible with that monthly report to see precisely what that's doing to the reserve ratio. And when we had a 60%, as we do now, it was always well above that. I mean, I don't think we ever, George nodding at me, I don't think in 25 years we even got close to breaking through that 60%. And, we might think, well, that's a good thing. But again, if you're thinking from an opportunity cost side, it's not a good thing to have more cash. And back then it was only cash. We didn't do any kind of investment in anything else. That's not necessarily a good thing in terms of maintaining purchasing power of your funds and so forth.
So is the 25% something that when you go back historically, those monthly balances that would have been below 25 actually? Or would we have hit 25 at one of those times?
I didn't look at all, but I don't, but the possible exception of the El Nino months, I don't think that ever happened. I can't remember ever even having a discussion or a concern about the reserve levels getting even close to that amount. It just hasn't happened.
Yeah, I recall we always had the opposite concern, the one you've just articulated, which is we're not a private business. We don't want to be in the cash accumulation business because that's tax monies that are better held by the citizens to do what they want. And we always had too much until now, of course, that's not our problem.
In fact, I think we remember we shouldn't be talking old home week here, but back in 2017, 2018, I think this committee actually made a recommendation to the council that they cut some of the reserve. I think the way it was going to be done is not renewing a portion of the utility users tax. And that was our recommendation. Council, their privilege, decided to reject it. But that came out of the fact that we saw many, many years of very, very high reserves relative to.
Yeah, and in retrospect, that was good thinking on the part of the council. The rainy day occurred soon thereafter, but anyway.
One last point, Bill, when you and I discussed and maybe to your question, the 25% also is roughly 3 months of run was part of the thing. So the bottom floor, 25% is 3 months of operating budget. Again, we don't have all the details on the operating budget, so we said, well, we don't want to go below 3 months. Right, and my point, I guess, is that 3 months in November,
Are very different,
which is
yeah.
1 month before you get the big slug of money, is much different than 1 month in June, on June 30th. And our experience has been June 30th, and that's why I'm hesitant to say 25% is a good number, a safe number, or a risky number, until we do this analysis. Yeah, I mean, the thing about historical data is we're in a whole new world, right? So the historical data, we were always running a surplus.
No.
We now know we're effectively running a deficit. So the historical data I'm talking about is cash balance. Yeah, we're not in a new world with regard to that. It's the same thing. It's certainly we're talking about property taxes, but I don't know about UUT as to when it comes in.
UT comes in monthly, sales tax comes in monthly.
Good.
But yeah, the big ticket is property tax. But I also want to add that up until last year, the sheriff's payments were quarterly. Starting this year, they're semi-annual. So the first payment will be in December, which is after we get property tax. So that's going to put some relieve some pressure on the general fund expense as we go through. And then the second payment is due in June. So it's going to be after both property tax payments.
So that means that if we have to pay the sheriff's department in, you said January?
Well, they'll send us their invoice in December. Yeah.
So I'm worried about November.
Yeah.
We won't have 3 months if that's the case, if we have a huge payment for safety in 2 months after. Yeah.
Yeah,
What-
we know property tax is coming. We know sales tax is coming. We know UUT is coming.
And we know the sheriff's bill is coming. That
And
will
then
be
the sheriff's bill.
surprised.
But it's the timing of that bill now, like, because if it was previous years, we would have had a big payment in September. And that could have eaten into the revenues that we're getting. But now that it's being moved to every 6 months, starting with December, we're gonna have our property tax payments in before that bill's due.
Any more discussion from the committee before I take questions, comments from outside?
I just have a couple questions. I'm looking at the fund activity as of, I think, budget. And then we thought the balance would go to roughly 2.5 million. I mean, this you handed out when we did the budget back in June. And then Sharif just said that he's eliminated roughly a million, or he brought the deficit down $1 million. So does that mean that the general fund is $1 million higher now? Roughly? No?
Well, it's just we're reducing the expense side.
Right, but
You know,
doesn't that
we're
mean?
trying to get closer to a balanced budget.
Yeah, but doesn't that mean
But I mean, right now, there's still going to be a deficit that's going to reduce fund balance, but the unknown is what's that beginning number?
Yeah, it was projected to be 2.5. And that's a different number than used in the report by Chris and Bill. I'm just curious, so does that mean we're roughly $1 million better, roughly?
The way I interpret, right, what we were presented back when there was the proposed budget. Again, these are all caveated by the finance team that they're now forecasting to be around 800,000 to $1 million better. However, what I heard were caveats on uncertainty about the actual value of the fund balance. But if you use what was submitted for the proposed budget, that's the way I would interpret it. Right, Tony?
Yep.
And if I read this right, tell me if I've got this right, just roughly. We're down, Sharif said, to maybe $800,000, $900,000 deficit for this fiscal year. And if one extrapolates into the future, when the sheriff's contract increase is fully in place, that would add another 400,000 or so to that. Like it'd be $1.2, $1.3 million structural deficit going on a runway with inflation added
Right.
on after that.
Right.
Okay, throughout the length of this contract at least. So that just will help everyone here in terms of our thinking of.
We have about, actually it's about, we're getting a 400,000 credit this year.
Yeah.
But there's about another 600,000 that they're giving us credit for the next couple of years.
Yeah.
But at some point, it's gonna go up almost a $4 million.
Yeah, right. Okay. So I'm thinking we have to figure out how to close from here, not 1.9 growing to the 2+ or whatever it was, but it's about 1.23 range. Yeah. Okay.
Sorry, and there's a cops reserve and of about 400 public safety cops.
Mhm.
Why don't we ever use it if the balance stays the same?
Well, that's part of the sales tax, the public safety sales tax, and there are restrictions on the use of that.
We can't use it for this, we can't use it for the,
Well, we can look, and
mean,
if the wording allows us to do it, we can obviously pursue it.
What
So,
else
but
would you-
it's something that, I mean, it's been in place that COPS grant's been in place for Prop 172. I mean, it's been on the
What-
books for a long time.
what else would we use it for?
Well, there's for capital purposes, we could use it for,
Use it to
Yeah.
build their
or
room?
because other cities use it, it's not to use to supplant their general fund expenses, it's used to augment their general fund expenses. So using it for staff, for salaries and other things like that, it's restricted from using for that. But we definitely can look at the language and see if we can use it for a contract.
Oh, okay, so that's, again, 400,000.
Yeah. We may be able, I mean, we may be able to use it one time, I don't know.
Okay, so okay,
Yeah,
so
we'd have
that,
to look into it.
we just
Yeah.
didn't bother, okay.
So I want to go back to the numbers here. This ratio, to point out in the report, includes all the assigned funds.
As they have been identified,
Right.
right,
And
and
so
adopted by the council.
at the moment of the $5.445 million, over 3 million of that is assigned to specific
Specific purposes.
activities.
Yeah.
So if this were to go down to only 25 or 30%, we would not have enough money to pay off our obligations to OPEB, and pensions and other things that we set aside because we know there are liabilities that we're gonna have, that the town is responsible for.
Right, if you reduce to 25% or to whatever level, yes, you would have to the council would have to, what's assigned, what's spendable, what's not spendable, what's restricted. Council gets to determine the levels. And, obviously, staff working with the finance committee can go through and say, here's our reserves, here's the levels, here's what's going to be assigned, here's what's going to be restricted, and then make that recommendation to council.
Lowering it from 60% seems
Right.
very risky to me.
How so?
Because 3.2 million out of 5 is already reserved for things that we have obligation, not all of it. There's some capital, emergency assignment, which is an emergency. And so that's 1.4 million of that 3 million.
But can't the council just change those assignments if they need to?
Yeah.
Okay.
But I'm saying that they're set now because we believe them, for the most part, not all of them, but particularly the two, the OPEB and the pension do, which account for
1.55.
million dollars is something that we know is probably more than that now, that we need to reserve for. And we shouldn't view that as extra cash that we have a responsibility to try and get the best interest rate on. It's something we're gonna have to pay eventually.
Yeah, we actually touched on that point in our recommendation. We had a discussion, to your point, the extent to which some of the reserved or assigned funds are highly likely to be spent within a known time period, even if they're not fully expected to be spent in the current fiscal year budget. These funds may be less available or prudent to tap in a financial emergency. We said, hence a calculation of what we call a second or an immediately available fund balance percent, excluding those both the restricted funds and those funds that you're referring to, and they're likely to be spent in the near term for, those assignments. So you could get a much lower number, but you have to go back to what the purpose of a reserve fund is. It's not to guarantee that for long periods of time, we can continue to spend at a deficit level, as well as covering everything that we would like to pay for, that we have a reserve or an assignment, which is a sign of a planned or desired expenditure, but it's not a committed desire. It's not something that has to be done right away. The only objective we have is to buy enough time for the town to make adequate plans to overcome those difficulties of an ongoing deficit through tax changes, additional revenue, et cetera. We have to believe we have enough funds plus other sources we can tap to make that possible. It was our judgment that this lower target range would not jeopardize that objective. I'm not saying it wouldn't put some stress on the council. It would, but we, again, and not, planning to go to the open space people and say, give us $2 million at 3% interest. But that is the ultimate backup for a town like this that has the blessing of having committed funds like that to very large amounts of commitment to restricted funds. Now, the day will come, I don't know when, I think someone may have asked it, when will that money be spent? I mean, when will the open space fund be spent, and when, and then it can't serve that same purpose. But at that point, we go back and maybe we have to revise this policy again. But as of now, unless anyone knows of planned expenditures, that's still there. Actually, one thing Chris and I talked about is, in the private markets, when you borrow from an entity that may have a immediate need or get the funds back, you have what's called a call feature. It basically says you can borrow the money at a certain interest rate. Maybe it's a preferential interest rate, but we will give you 60 days or 90 days notice, and we have the power to call it all back. And
That's happened to me.
Yeah.
Yeah, the call from a
So-
at pharma company, yeah.
So there's a balancing act that has to go on, right, between the restricted funds and the
Yeah.
role they would play in our very pessimistic world. Something horrible's happened. We don't have enough money to keep the town
Yeah.
running. We don't have access to funds through other emergency lending vehicles. What are we going to do? Well, there's some things we can do.
Yeah. My own view is this is a very thorough report, and I really appreciate the FAQ and all the rest, and I'm comfortable with the range for the reasons you just articulated, because the only real reason I could see of us having that blow up would be just as you say, there's a major earthquake and we're in calamitous times, and we do have cash available that we could borrow or somehow use to cover operations while we then fix it, so.
So it seems to me that the purpose of the policy is to determine when do we raise the storm flag? And you're now suggesting that 6% is too conservative and that we should lower it to 30 or 25%. And it seems to me that it's pretty obvious that we now are aware that we have a problem with our finances in the town. The policy is at 60%. It works for this year. It probably won't work for next year at all. And that means we won't be consistent with the policy anymore. So I'm not sure why we're changing it. It isn't that we have a problem in the town of identifying that we have a problem. We're well aware of that.
I would like to go on record and say we might be below the policy now. Yeah, but again, I just don't have that number, but
Right.
I don't want it to come back and say, well, you didn't tell us. Like, well, I'm telling you now, that number, that fund balance number could be below the 60%.
So what happens when that means we're not in compliance with the policy?
Right, so then it's, how do we get back in compliance with the policy, or do we change the policy?
Right, so now we're suggesting to change the policy.
Because even the GFOA, which is the Government Finance Officers Association, their recommendation is 30%.
Calculated on an annual basis or
Annual basis.
monthly?
Well, it's annual basis, because when we close our books on June 30th, the reserve needs to be at whatever the fund balance reserve policy is. So that's the measurement date in regard to the financial statements, but having that spreadsheet on a monthly basis, you can keep track. And if you see, hey, we're going to be below this number by the end of the fiscal year, let's start taking action right now. So that's the purpose of that spreadsheet that keeps track of fund balance reserve throughout the year. Which again is my goal to have to the town.
Okay, I just like to go on record saying I'm not comfortable with making it less. I think having a storm flag raised early is a good idea.
So I think, Ken, what Bill and I were grappling with is the reality of we're in deficit spending. There's no quick way to turn on revenue spigot. So what do you do when you're in a situation where you have an imbalance? So again, I think we have to get real here that this is a different time. We cannot operate at 60%. We're not going to operate at 60%. I don't see any solution to get to 60% in the next 12 to 24 months. So, one of the ways to touch that is reserve policy. That's one, but we're here to talk about how many subcommittee readouts? I don't know, 8, 6. So
We're not going to finish.
one at a
today.
time.
Yeah.
Yeah, one at a time. And I think, look, my position would be, I think we all discuss this because we haven't had the opportunity, right? Like Bill and I spent time on this. You spent time on things. So I think we can all hear what's out there, and then we're going to have to make soup out of a bunch of different ingredients rather than vote on one ingredient one at a time.
I think that's a great point. And that's, in my early remarks was, we're starting a process here. We're going to have to carry this probably to the next meeting in terms of all these readouts. Then we're going to have to do more work based on more data coming from Tony, reactions from the public, reactions from one another, and come back and do it again until we converge, because different comfort levels here. So I don't think we're trying to reach resolution today.
So this opens up a whole nother area. You're saying that you're doing this because you want to spend the money so we have additional runway to solve the bigger problem.
Well,
Or structural
think,
problem.
I think, at least from the discussions that Bill and I had as one-on-one, is we want to have a backstop in case some of the other things not be implemented quickly enough. Because we don't know how quickly expenses can be controlled, revenues can be raised, the real estate market can change, right? Consultants can be cut, whatever. So this is a backstop, and it's one of many ideas that all the different subcommittees are looking at. It's not the solution, not in my opinion.
Right, well, actually, whether the policy has changed or not, the solution is to give us additional runway is always available. You just want to highlight it that it's available
Well, I
today.
think, and, I think the write-up, which I credit Bill for, was very thoughtful in that. I think we're making a recommendation, the two of us, this subcommittee can decide if it's the subcommittee's recommendation that we should relieve it. But when we relieve it, that we should have deeper scrutiny and visibility into the balance in real time. And there's been some good questions raised here about just how lumpy is the revenue, just how lumpy are the expenses, and Tony just presented, right, that the sheriff's contract is different as well. So, like, I, for one, listening to all that says we need to model that better, so that we can then test the 25% question. That's, I don't know, Bill, is that fair?
No, I mean, it's all, I mean, these are all, we grapple with the same issues. I mean, when you're dealing with reserve policy, you always start with the disaster scenario and how bad can it get? And then you climb out of that hole and say, well, it's unlikely, it's a 2% chance of that. If that happened, there'd be other things, et cetera. And so you work yourself back up to a point where you say, okay, maybe there is the one thing we agreed on, there was no one knows what the right percentage is. We know a 200% reserve ratio is nuts. And we think, 10 or 15%, which is actually kind of recommended by some government, is probably insufficient for a town like this. So, we don't have enough data. We don't have enough experiences with these types of problems, fortunately, because the town has benefited over the long term from, pretty healthy financial condition, to know. So we have to make a judgment, weighing the worst case scenario, how quickly can we respond and find monies to pay the town's bills and keep going, versus the very high cost of holding large amounts of cash that, unfortunately, the state of California, and I understand all the reasons they do it, makes it undesirable. The state of California intentionally doesn't want towns going out and, investing in private equity and stock market and everything else. It's not just because of the risk. They don't want towns raising funds from their citizens to build up big investment accounts that aren't taxed by the state. I mean, they'd rather have them in the hands of individual taxpayers where they can collect California state income taxes. So everybody is kind of looking, from their own point of view. So anyways, I think, we're not done, I guess. We're gonna be more discussion of that, but I think it was a good starting point to think, to set the bar that we think we can live with a lower target number and a range, as opposed to a single point that, on either side implies, some important things have to happen when you move 1 percentage point. That's probably not rational. It's based on the variability of the income through the year, by month, et cetera. But it was helpful for us to kind of debate all these things among ourselves and at least get this down as a starting point. So, we may learn, I don't know, Tony may have some experiences he'll be able to share with us down the road. Again, I would love to know what we did back in 1997, 98. I don't know what files we've got over there in the town. I'm sure we applied to FEMA. I know we got at least $4 million of money within 3 months to rebuild a road
Yeah,
or something.
And I think FEMA reimbursement took like a year to get back to us. So we got to pay it off quickly, but we did have that timing issue.
With the city of Saratoga, we did it. We just did it as an exercise. It was 2016 or 17, really bad winter storm, and national, declaration of emergency was made, and FEMA said, "Hey, you have access." And so the city manager goes, let's just do it for an exercise. And I mean, our total bill was about 200,000. But it was fallen trees and we had a hillside fall. But it was a very lengthy process as far as documenting all the damages. We had to give GPS coordinates, pictures. And then when we submitted, we got the money back, and then 6 months later got a letter saying we had to return 60,000 of it because a portion of Highway 9 was funded by another federal fund, and the claim should have went to them. Even though FEMA went through FEMA will walk you through the process. They'll have somebody on site and they'll consult with you. So we're like, well, how did you miss this, Mr. FEMA guy? And, but yeah, it's a long drawn out, but they'll walk you through it. And, yeah, we went through that process a few years ago.
Anything else from committee members? Oh, yeah, Craig Taylor.
So we're not gonna come to any conclusions today on this.
I don't think so. I think this is really great discussion, thought provoking. And once we're done talking, we should hear from Craig, then there's some hands raised online and then we'll move.
But we'll wait until we have, until probably the third meeting
Yeah, we're going to make recommendations later after we
summarized.
through all of
Okay.
this.
Actually, George, I had just a couple comments. First,
Oh, yeah,
I thought
please,
that,
Mark.
first, I thought that the memo was very well written, and this is absolutely the right time for the Finance Committee to be raising this issue for the town council, because as Tony mentioned, the town may be out of its own policy right now. Or if it isn't right now, it will be next month, or if not next month, for sure the next month. But so instead of being permanently out of compliance with its own policy, I think it is absolutely appropriate that the town council think about that, or at least acknowledge it. And if they maintain the policy, then actually it calls the question of, well, then how do you get back into compliance? With regard to the policy, I very much agree with Bill in terms of this idea that it strikes me that maybe having that very significant cash balance in the hands where it cannot even keep up with inflation may not be such a good idea. The two items that did give me concern are the same ones that I think give Ken concern when I looked at this, which is the unfunded pension liability assignment and the unfunded retiree medical benefit. Both of those, one is $713,000, the other is $835,000, for a total of $155,000. I think in the private sector, at least for businesses that I've been involved with, the equivalent employee liabilities associated, you reserve against them and you do not touch them. I'm a bit surprised that it's even in these general unrestricted funds, because yes, they're technically not restricted, but I would think that they should be reserved against. And I'm almost wondering, as you wrote that paragraph and you anticipated this question, I'm wondering if you gave any contemplation, Bill and Chris, to perhaps recommending that those two specific items, the unfunded pension and the unfunded retiree benefit, might be reclassified instead of unrestricted to actually be restricted funds. That may be a safer way to make sure that we don't actually spend those monies. And even if we have a plan to somehow pay it all back, I would actually, I mean, that in the private sector, that actually, these types of accounts actually go above secured debt in terms of how important they are. So I'm just wondering if you gave that any thought.
I think we did tangentially, but let me speak to the issue of restricted versus unrestricted or reserved. There's a lot of stuff that comes along with restrictions, and it's not always good to voluntarily put something in a restricted fund. It greatly, Tony probably knows this, it creates restrictions. That's why they exist, on what you can do with the fund. So it takes away flexibility, doesn't add to it. The unfunded pension liabilities and so forth, for want of a better way of saying it, are things we don't have to pay off this year or next year, or maybe the next year. They're in the category of kick the can down the road expenses that eventually will have to be paid, but they don't put a pressure on you to fix them this year or next year, with the exception of, I think, the CalPERS. If there's a deficit to your CalPERS thing, I think you have to make that up within the fiscal year, right, Tony? I can't remember exactly what that is. But we have these set-asides to fund that we're totally in compliance as far as I know. And we don't need to worry now that we're not going to have the funds to pay them when they're due. Again, the reserve policy doesn't guarantee you're going to have enough money to cover the next 10 years of shortfalls on whatever you choose to spend. All it does never fixes the underlying problem. All it does is buy you time. And all we're trying to do is buy the time the town needs as cheaply as possible, and only for the time period that the town is likely to need it. So those are things that, argue for, keeping them excluded, not treating them as restricted, and, thinking about a lower range of an acceptable reserve policy. But I acknowledge it's a good way to, good question to bring up.
More from you, Mark?
No, thank you.
Okay, Councilmember Taylor.
Thank you. So this has been great discussion. Thank you. And I think it's really helpful to be thinking about this stuff ahead of time. Like, this is the time to start this discussion rather than when we go, oh, we blew through 25% and now what do we do? So thank you for starting this conversation. One of the questions I had is, the 25 to 60, do you have some sort of, within that range, a target that you're sort of hoping to sort of maintain? So that it doesn't, because the problem with the range of 25 to 60 is people go, great, 25, we're done. And, the 60 somehow magically disappears. So I've appreciated that you sort of said 25 is this hard limit, and we've got some things that will happen when you get there. But maybe, to Ken's point, is maybe there's something at 35% or 40% that says when you get here, you need to start meeting and start having discussions. Like, it may not be as hard as the 25, but that the conversation starts. You don't just let it, crash at, into 25 and then start a conversation.
Well, I'll answer. I don't, Chris may disagree with me. I don't remember that we actually ever discussed that particular issue, but I'll tell you what my preference is. I'm closer to Ken on this point. I would like it to be around 58 or 59. I would like it to be at the high end of the range. I think we said in here, we called the 60% a soft target. And what we meant by that is if it's higher than 60%, that's okay. But we don't want the town to be doing things to stash more cash away that we can't really invest profitably to get way above 60%. We don't think that's from an opportunity cost standpoint, it's not a good use of the money. But underneath that, we don't really want to push the boundary. We put recommendations in here for some pretty hard things that have to happen and areas that have to be looked at and cut if we get down to 25 or 30. But for me, I'd like to see us living in the 50, 55, 60% range. Maybe 2 to 3 years from now, when we get, things in better balance, we figured out how to cover the sheriff's contract on an ongoing basis from whatever revenue measures we decide to do. So I'm my preference, but we have no data to support that. There was no analysis we did to say, well, the mathematically correct number is 37%. We could do scenario analysis. We actually talked about doing that, where you'd say, if this happens and this happens and this happens. Tony, I'm guessing, probably ends up in effect doing that kind of stuff in his annual work for the town. You run scenarios of this happens, where's the town going to be? He may actually end up giving us a better answer to that question on where it ought to be.
Yeah, you can tier it and say, this is our floor, but if we get to this certain point and the trend is still going down, then we need to start looking at how to get going back up. So, you can build that into the policy that's saying that if it gets to this point, we can start pulling these levers or start this mechanism and have the meetings, and you can all document that in the policy.
Yeah, and I think all that sounds good. It's just the 60 was starting to get a little conflated with the don't keep too much money on hand. So, I think that's when I was listening to the discussion. So I think as you guys move this concept along. If you think the sort of rough target is around 50 that, you know, you're sort of shooting for, or whatever it is, I mean, I think that would be a useful piece, because I didn't hear the soft 60 as we're trying to hit 60. I heard it more like we don't want to exceed 60 because it, you know, it's expensive use of money, which I totally appreciate as well.
Yeah, I think, again, understand we're making recommendations based on the data that's available
Yeah,
at this point in time.
yeah.
So, you know, that we spent more time talking about how low can you go
Right.
rather than where would you like to
Yeah,
land?
where would you like to be?
You
Yeah,
know, but,
sure.
and we expect a couple years of turbulence.
Yeah,
right?
absolutely.
You know, and so it probably would be better looked at after we get through some of the bumpy times when we have audited financials and
Right.
Tony's, you know, now got more experience with how the business runs.
Yeah, and hopefully we smoothed out some of the unexpected, you know, like the sheriff's contract being a big hiccup that showed up. Yeah, because sort of trying to understand like, if we're trying to protect ourselves, like, for how long would be the other question. Not that we need to answer it now, but, you know, is it, we need it for a year, or is it like 3 years? Because some of the tax measures and stuff we're looking at, they don't happen overnight. So, you know, that kind of modeling. And then one of the other things, you guys proposed a joint meeting between town council and the finance committee. And I wondered, when you think about that, you know, one of the things that works pretty well within the town is, you know, something like the finance committee meets, they take public input, and that sort of evolves, and then a sort of report comes up to the council. And so I was wondering, when you're thinking about that joint meeting, kind of what your goals were. And maybe there's there are earlier meetings that maybe we haven't talked about that sort of do that stuff. And the joint meeting really is we're at 25%, the ship's, you know, sinking, you know, the klaxons are going, whatever. But, you know, that's one thing I would ask you, as you move this concept forward, where you want to put a joint meeting versus the finance committee making recommendations to the council.
Well, I can speak for myself. In our paper where we talk about the 25% lower bound is a hard floor, and decline below that, or monthly forecast of a decline to below 25% will dictate the follow we actually taken. So in my mind, we're under the gun now. We're running out of time. Going through the normal process is time consuming. I mean, you know, we got to get the committee together, we come up with recommendations, and more time. The idea here was to put a spotlight on the urgency of getting all the decision makers, as well as all the recommenders and people with ideas together, force them to get together fairly quickly within 30 days, and have a number of hard discussions about specific things that would have to be cut. And we actually listed some of the things that would be on there, like hiring freezes and, you know, a number of other things. We're trying to signal the urgency of taking action when you get to that 25 number. Hopefully that allays some of Ken's concern of going down below 60, because, you know, if we do really good things, if we ever got down to 25%, I'd feel better about that than if we kind of, you know, kept 60 and, you know, we fell at 58 and we didn't do anything. The reality is, some of what we would want to do if we hit the 25% hard floor has already happened,
Right.
as it looked like we were going to go below 60% this year, right? I mean, there's been, the capital budget has been frozen. The sheriff's office is going to be postponed at least. So some of that action is already
Yeah,
happened.
in
And
flight,
and we haven't even got down to 60 yet, or we don't think we are.
So then my final question was, Tony, you had mentioned this monthly report that you want to get to, but, you know, the question I was asked is by when? You know, the thing I'm always looking for is there a date when you think you'll have that? And I'm not expecting it next month, but
No.
it's like, well, it'll happen someday. It, I think, doesn't leave the public very reassured, because there's a lot of things that people have been saying were going to happen someday, and someday seems to slip off into the, you know, horizon. So do you have a rough, I mean, is this in the next quarter, in the next fiscal year? I mean, what's, you know,
Well,
assume,
the goal would be this fiscal year,
okay,
that we would have this type of report. I mean, it's probably going to be the last quarter. So
Okay.
Between April, May, and June. I think that's the earliest that I could commit to.
Okay, so,
But it's just gonna be, I mean, I just don't think there's an understanding of how far behind finance was. And to prepare financial statements, we have to go through every month, every transaction, every bank statement, making sure everything's been posted. And that takes time.
sure. And I think all I'm saying is, I think the important thing is to set people's expectations.
Right.
Because when you say you're going to have them, people think next month. And that's not what you're thinking, but without financial knowledge, people are going to expect it sooner. So setting people's expectations.
Right.
And then we can go back if they say, oh, that's not, soon enough. That's a different discussion and we can then justify why it is when it is. But
Yeah.
I think setting expectations is important. So, okay, well, thank you. I really appreciate you guys doing this. This is just the perfect stuff to get to council because this will really give us a lot to work with.
Thank you. Going to comments from the public. David Cardinal, you are very patient. You've had your hand up for quite a while. Please speak to us.
Well, thanks. Fortunately, it's a virtual hand, so it's not that tiring. Thanks. First of all, I think the proposed policy is really well written and makes perfect sense to me. I can go along with, I don't know enough not to go along with whether it's Ken or somebody else on whether it should be 25% or 20% or 35% or quarterly or monthly. But I thought it was great. So I'm totally on board. Thank you.
Great, thank you. Other hands, Caroline.
Great, thank you very much. Can you hear me?
Yes, we can.
So I just wanted to point out, yes, the sheriff's contract is one of the big source in her budget, but there's so many projects that have not been completed because we're waiting for the update on our finances. As a committee member, and there's several committee members present here, we have tried to get grants and we never qualify or whatever. So I think what the finance director was mentioning, yes, you can get FEMA funding, and then they will guide you through it, and then they will request funding back. We have seen this with FEMA, we have seen this with CCAG. There's too many agencies who get money, and they think there's and they promise that you will get funding, but there's no coordination. And so that's the biggest problem. So it's very time consuming. And the town is really in need of so many upgrades. We have issues with utilities, infrastructure. We're trying to do the safe routes to school, upkeep of trails. I mean, I can sum up all these issues and nothing has been done because every time we cannot do anything because we're waiting for the finance report. And it's now what, 2 years almost? So we're only going back instead of forward. So yeah, very disappointed, but hopefully will come up. I really like the comments of Bill and Ken. Keep it conservative. We showed we were able to do it in 2014, 15, even a little more. And then suddenly this new manager came in, had a new plan, and none of our questions were answered. So it's not good to go back. We need to look forward, but please be conservative. There's many issues in our town. It's not just finances. So thank you.
Thanks, Carolyn. Dale Fowl.
Yes, thanks, George. My comment on this is pretty straightforward. I would prefer you not change the policy. If we are in such dire straits, and I believe we are by fiscal mismanagement, the town council should declare a fiscal emergency, temporarily change the policy for a very short period of time, maintaining the fact that they're in a fiscal emergency until they can get back to the 60%. I disagree entirely with changing the policy in general and essentially giving the town council a free pass to drop below it. Thanks.
Thank you, Dale. Rita Combs.
Hi, thank you for taking my comment. We've been talking about the backlog, the financing, how we can put money in this pocket and that pocket and this and do that. In the meantime, we're signing all these little side contracts with more consultants, but we're not seeing those. And we've been asking, different people have been asking, I've been asking a few times. And I don't know where they're going to.
Rita, you're breaking up. Can you speak closer to the microphone? You're cutting out.
Okay, it's about infrastructure in our beautiful town too. But to get the contracts that are being signed to be able to close the past books, I really appreciate this conversation. I know that it's very similar to the last wonderful, great meeting that you guys had. You guys are really syncing with the information, but as what's been mentioned today is a lot of this stuff is just not moving forward. And it's not about not moving forward fast enough. It's just not moving forward. We can't get different grants and different loans because we don't have the due diligence paperwork, our very own paperwork, in order to submit to get these items. So thank you for your hard work, but really the town itself has to pull its act together and stop giving excuses and get this done. We're spending hundreds of thousands of dollars in attorneys and other fees that you guys are trying to talk about, and you're doing a great job, but the town has to stop spending extra money to not then have answers on these long-term issues. Thank you for listening, and thank you for all that you do as volunteers for our beautiful town.
Thank you, Rita. Anyone else? Seeing no one, we'll move on to the next agenda item, and this is the PV Thrive beginning of working group updates. And suitably enough, given the comments, I'd like to start us out with the expense reduction track. And that is Stephen and Mark's bailiwick, so I leave it to you guys to sort out how you want to present.
Thanks. Given Mark is in New Jersey, I will go ahead. Mark, please chime in. So we were tasked with looking at the fiscal situation from an expense standpoint. We did look at revenue as well, but really I'd like to see how revenue in terms of taxes and fees and so forth have grown over time relative to inflation, relative to expense growth. And that's helped to kind of inform what we recommend. It's also important from a context standpoint. We're assuming no new revenue sources for this analysis. What we really wanted to do was look to see if what cuts can be made, frankly, what optimization with respect to operating costs and so forth can be made in the absence of revenue. That way, to the extent we actually have to go down the path of raising taxes, we've at least looked at all all our other options before going down that route. We've also focused on the items that have the most impact. Certainly, we could look at a lot of the smaller line items that may be out of whack, but to the extent they don't have any meaningful impact on ultimately getting the finances in balance, we really did focus on three primary areas. One being the town payroll, the law enforcement or sheriff contract, and then the cost of consultants. We looked at a few other items as well that I'll touch on. But before diving in, I think it's important to stress that Sharif and the staff are on top of a lot of this, and Sharif mentioned at the top of this meeting that they're looking at a number of these things. So that's brings us it makes us optimistic that a number of these recommendations are not new. They're being pursued and hopefully will be implemented. So I'm not going to go through the memo in detail, but rather hit on a few key findings. First, relating to the town staff, really just trying to initiate a conversation, maybe a debate in terms of how best to balance the budget. Obviously, employment and staff is a key item. We've looked at a 10-year period from 2012-13 fiscal year to the 2021-22 fiscal year and looked at what staffing levels were. And that's really to inform us in terms of where is the optimal staffing or what can we actually function with. And if you look at that 10-year period, The low was about 13 full-time equivalents or FTEs. The high was 16. But over 7 of those 10 years, about 14 to 15 staff represented the FTEs for those years. So we think the town can operate on a pretty lean level of staffing. We're not consultants. I don't have a sense for how to optimize the operations within the town. But we do think that looking at historical staffing levels and seeing how we were able to operate during those periods, I think is helpful. And again, for 8 of those 10 years, I think we were able to get our audit done with those lower staffing levels. So I know some pushback may be, yes, at lower staffings, we're gonna drop some key service levels at the town. But again, we'd just like to look at this from a historical standpoint to help inform going forward. The elephant in the room, of course, is the sheriff contract. We admittedly have come to this late in the game. A lot of smart people have spent a lot of time on this and have negotiated what's in place. There is an opportunity before the end of this fiscal year to negotiate changes to the contract. And one, I mean, this is not a brand new idea, I'm sure, but is to bring some competitive pressure into the process. Some obvious alternatives might be Menlo Park or Palo Alto police departments. Could be Santa Clara's sheriff department. But the benefit of this is we'd have a market check on the cost of this type of service. We'd need to put in place, or we'd need to analyze what service levels we need, what the full-time equivalents of sheriff officers should be, or law enforcement officers should be. But we think through that competitive process, we would attain some additional leverage in negotiating the best possible contract. So we would recommend that this alternative be looked at least this process. And finally, the use of consultants. I don't think it'll surprise anybody, but 10 years ago, with 13 full-time equivalents, we did not have consultants engaged at the level we do today. The budget for this year, at least the last budget I saw, was $617,000 for consultants. The legal counsel has doubled over that 10-year period as well. The legal fees that we pay for outsourced legal services. So I guess we're concerned that in recent years there hasn't been the scrutiny applied to when and if to hire these high-priced consultants, and we think that given the costs, given our inability to afford these costs, that this really needs to be looked at. And again, I know that Sharif and staff are looking at this very closely, and we would expect some significant changes in the months and years ahead with respect to consultants. We also hit on a few other ideas in terms of planning function and the building function, given the large losses that they operate under. Again, staff is looking at that. And then also the sheriff substation, which I think Bill mentioned a minute ago. There are a number of larger capital outlays that are on the or in the budget that we think, unless they're imperative, that they be shelved until we get a better sense of the fiscal situation, including the sheriff substation. But again, we're optimistic that Sharif and team are looking at those, and there will be significant changes. So that's a summary. The memo goes into a little bit more detail on a number of these items, but we're happy to answer any questions.
Great, thank you. Open for comments.
And
Wait,
Mark, if you have
Mark.
any.
Yes,
Yeah, actually, I was just a couple of things. So thanks, Steve. In terms of actually both these significant expenses, they really are headcount driven in all three aspects. I mean, you know, the town doesn't actually make products, it actually delivers services. Services are delivered by people. So ultimately it is about people in all three elements. You already touched upon the town staff. The one I would just say a bit more about is around policing, recognizing that public safety is a key element of the entire town, and it's a stated priority for the town council. So to the extent that either the public or really the committee would like a little bit more information, I mean, I wasn't a member of the committee at this point, but Sharif wrote a very good and informative memo on March 13th, and that includes the most recent sheriff contracts, and there the costs really are very directly related to what those FTEs are. Those FTEs are 5.25 FTEs. You might ask, well, what's the 0.25? Well, I mean, they do separate by function because this is a shared resource among different areas. But for example, a captain is in that at 0.25. So and I would expect, even if we absolutely, whereas we have really no competitive tension now to really negotiate, frankly, anything, you need to have an alternative. Right now, there doesn't seem to me to be an alternative, so we need to develop an alternative. But a key part of that, and the first part of that, is the recommendation that the town council determine what those FTEs should be, and trying to balance, what their objectives are. Because if we go out to an RFP to different police departments or sheriff departments with higher than 5.25, I would expect actually we dig ourselves in a deeper hole. So I think there needs to be a recognition that, in fact, if we are going to want to be saving money, because already right now the contract already has at 1.8 million, but in fact that's understated because Sharif has negotiated with the county of San Mateo to actually defer the true full hire cost. In that contract, that is part of that is Exhibit B, part of that March memo. And I mean, the fully loaded rate, it looks to be closer to 2.3 million. And I would expect that number to only go up, and it will go up even further if we actually have a higher than a 5.25 FTE. So that's actually an important part. But I think that this deliberation is not an easy one for the town council to consider, because it does mean that there's going to be a balance made towards, in a way, lower public safety. But that is, that's, I just want to make sure that was underscored.
Great, thank you, Mark. In terms of the sheriff's contract, I remember when we were going through this like a year ago or so, we talked about the same kind of ideas, but I don't think anyone bit in the sense of Menlo Park or Santa Clara being interested in doing what we're doing. Does anyone have a different recollection on that?
Not different, I agree with you.
Yeah,
So they were approached and they declined.
that's my understanding. Yeah, they're, not really in the, I think the sheriff is kind of unique in that they're already serving San Mateo County. We're in San Mateo County, so okay. Whereas if you're a Santa Clara based organization or you're a municipal organization for Menlo Park or Palo Alto, well, why do I want my cars not in my neighborhood, but 8 miles away in another town? I just don't think they're in the business of doing it. Because I was, as is my wont, I got rather passionate about, the same argument you guys are making about market forces. We need some kind of competition, et cetera. And, unfortunately, we don't have a market. We've got a monopoly, and the new sheriff has changed how they're allocating overhead. So to our detriment.
I actually recall that when we looked at this before, that the sheriff originally wasn't even willing to commit to how many people he would supply us. So it's very nice to know that we now have a commitment for 5.25 people, full-time equivalents. So we've actually made some progress in our negotiations with them. And I realize that neither Mark nor Steve were here when we had those previous discussions.
I confess to being as frustrated as everyone on this basis, in that, we pay property tax here like everyone else in the county does, that goes mainly to the county. And if we weren't a municipality, we would get the sheriff provided because we're paying our property taxes for the sheriff, but we're paying our property taxes when we have a town. And then we get a little bit of the tax money back, not very much, but then we have to send an overwhelming proportion of it back. So it feels like I'm paying twice for public safety as regards, as compared to, say, an unincorporated area right up the hill behind us. But I don't see, as a practical matter, what we can do about it. And I'm just venting here, partly for information for everyone, and also to hope that maybe somebody can come up with some idea that we haven't thought of yet.
I guess the question I have is the sheriff's contract a given? Is that a planning assumption that we can use going forward? Or is that an action item? And who can answer that question?
Well, whenever the contract gets negotiated, it ends up going to the council.
Yeah.
for the council, would be an actual item for the council.
Craig, I mean, it's your perspective that it's, I'm not putting you on the spot, but your perspective that it's, this is a given for us at this point? Because I think we do need to start anchoring some of our recommendations based on where we know we have immovable objects.
Yeah, so let me speak for myself and not for the whole council, obviously. But yeah, I think unless we find some way to look at the costs in other towns to get some negotiation, I mean, we're not gonna not do law enforcement. I mean, so it's a given we're gonna do some kind of law enforcement. And at the moment, it doesn't seem like we have any other options. So I think the practical answer, at least from my point of view to your question, is, yeah, it is what it is. I'd love to see us find an avenue just, to basically this, well, we're double paying or whatever, and maybe there's something there, but until we find it, I think it is what it is. And, it was clear in this last negotiation that this wasn't customized to us. This was like, this is the same blueprint we're using with everyone. And so that gives us even less leverage because, then it's not even a custom negotiation anymore. It's like, no, we're doing it the same for everybody. So yeah, it feels pretty immovable to me right now.
Yeah, and I would only add by virtue of the fact that we're kind of stuck because for bigger towns, if we had Palo Alto's population, then one option is, well, we'll have our own police force, be cheaper. Or we could not have our own police force and do the sheriff department, but we're having our own police force would cost far more.
Yeah, I mean, unless we could do some work with Woodside to do some blended thing and get a little bit more size, but even that doesn't make it very much bigger.
Mark or Steve, did you guys, I mean, did you see some opportunities rocks that you felt were unturned?
I think certainly the competitive process we think is important to the extent it's been tried and failed, then obviously we've gone down that road. I think Menlo Park makes the most sense, obviously, given that we share a border. But if they've said no, and I don't know what that process looked like, but the memo shows cost per resident for ourselves, Woodside and Los Altos Hills. And we're in line. We're a little bit higher than Los Altos Hills. That's going to go up to Mark's point quite a bit more in a year when the full amount hits us. So it seems like there may be room on the margin. I don't think this is a dramatic cost reduction area though.
Yeah, and I'll ask around to find out what exactly happened, but I don't recall the exact wording, but I was told that didn't work. I don't know what that was exactly, so I'll look into that.
I have I just came up with a weird thought. I quite honestly have no idea what it's like for a sheriff's deputy to spend a 12-hour shift in Portola Valley. I don't know what they do. I don't know what stresses they face. I'm not volunteering myself to do this.
Right along.
But I would, exactly. I would like, I'm sure this has been done, some version of a ride along where we could, someone we trust who's maybe on one of our committees, doesn't have to be the finance committee, could report back on what policing, at least, in the patrol car on the ground level feels like and looks like. Because I really don't know that. I mean, I have a perception that we're spending money for officers that are waiting by the stop sign at Alpine and Portola, waiting for a cyclist to blow through the stop sign when there's no traffic there, and pull them over and spend 15 or 20 minutes giving them a ticket, which I don't want them to do, right? But that's kind of an aside. I mean, some years back, I think a couple of us got together to try to, this is before the contract got really expensive. And we had a meeting with one of the, I think it was a captain, and we said, tell us, we want to see the line items. We got all our cost accountants in town together, and we said, show us your cost of service. And they had stuff in there that blew me the cost of their vests, which they have certain holes in it. So, I mean, we found out, for example, that every time they write a ticket, all the revenue, like 96% of the revenue from the ticket goes to pay court costs, it goes here, there, anymore. Town got 4% of the value of every ticket they wrote. So I came up with the brilliant recommendation, mandate they don't write any more tickets in town because it's a waste. They're spending, their time, 20 minutes of their time or whatever we're paying them. And we're getting 4% of the revenue generated. That's like crazy. But that's kind of my idea of a ride along. I would really like to understand better. Because if we're going to start making judgments about what we want police forces to do, we've got to have more intelligent data. We're not really trying to do that here. We're just looking, we're taking the contracts that are offered as a given and saying, can we get a cheaper service
Yeah.
from another entity or a private entity or something like that, but doesn't get into the cost of the stuff there.
Well, and given we don't have a competitive dynamic, I have a suspicion that we're mainly overhead recovery. I bet a lot of times there is no sheriff here in Portola Valley. I recall at one time, the one data point that I remember seeing at one point was that it was a 20-minute response time for someone in Portola Valley because the officer in question was up in La Honda. And that's my worry. My worry is we have an officer officially assigned here, but when they have calls that are in the hills, in the unincorporated area near here, our person is closest. So that's really what's happening. But I have no hard data on that, but I don't suspect I'll be able to get any.
Yeah, I was surprised when I saw 5.25 FTEs because I can't imagine there's somebody here 24/7.
Well, and just remember like detectives that we get if there's a burglary. There's a bunch of other stuff that goes on. I'm not trying to defend this contract because I don't know all the details either, but it's more than just the patrol car in town. We get a lot of additional services. And that's one of the arguments the sheriff makes is that they're providing is this broad array of services and the FTE for the patrolman is kind of the proxy for all that other stuff.
Yeah, and so the other idea I had, and this is in the category of kind of crazy revenue raising opportunities, was to look at policing from a revenue standpoint. And some towns in the past have done this where, for example, your house alarm goes off, generates a police call. If it's a false alarm, you get a bill for $250, right? Because you're wasting resources, it's et cetera. So there are towns, I'm not suggesting we're ready for this yet, that have put fee recovery on certain activities that police officers do. The easy one is, false alarms, get revenue. You're still paying the same amount for the police contract, but at least the town's getting some revenue to reimburse you based on the service people need. If you have a burglary and the police have to come in, maybe there's a $250 response charge. I know people would react negatively to the idea of paying a service fee, but quite honestly, that might be a good way, a better way to figure out how to make the police servicing affordable for the people who really need it. We're treating it like it's a free resource once it's contracted, but there's a lot of services that there's a base fee and then there's an incremental charge, but based on how you use it. There might be some creative way to thread that needle. Maybe it's $100,000 or $200,000 a year of incremental revenue related to activities that people ask the police to do. I've only had one request for a police officer in 20 years, and that was to kind of identity theft. Someone had ordered a laptop computer, using my name, using my credit and so forth, and had it shipped to the house of someone else in town where some contractor who was doing work on that picked it up. And we figured out that contractor had been the one who had, somehow gotten my information from the files of someone else in town who I was working on a committee with, not blaming any of you. And so the police officer came in, there's nothing they could do about it, right? He took the police to court, they worked and recovered it. That probably cost $1,500 or $2,000 of police time. If I had known that, or if I had known I was gonna have to pay for that, I probably would have said, screw it. I don't, stuff happens, I'm not harmed, it's over. So. I don't know where that
So-
gets us.
Yeah,
George,
I-
if you don't mind, I have a couple data points I just wanted to share if it would be helpful.
It would be,
That'd be
Sarah.
great.
Thank you so much.
Okay, just really quick, and I'm not positive of what the new title is, but we have the equivalent of a volunteer that is a police commissioner. And we just reelected that role, and it's now a dual role, and it's Kevin Welsh and Ed Holland. So for those of you, perhaps they could write a summary of what the ride around request is, because they work closely with the local sergeants in town. So that's one thing. And then the second is for those of you who haven't already, and I think probably most of you have, there were two very detailed discussions on what is and what is not included in our sheriff's contract. They were on April 26th and June 13th of last year. And so for those who are looking for more information, it's like an hour-long presentation each of those days from representatives from the sheriff's department. So just wanted to share that background.
Thank you very much. That's helpful.
Yeah, hi, it's Michelle. I've been on the committee for, hate to say it, probably close to 30 years, but just to address the town full-time equivalent numbers. I can actually remember when the town manager named Angie Howard and Stacy, who was, I think, part-time, did all the finance for the town. So that was that was like 0.6 finance people, and now we're up to what, 3, 4? So I think that's a good chunk of the increase, and I think it's due to software, which gives us a lot more information.
With software, segregation of duties, you can't be effective with internal controls with 2 people. It creates a lot of opportunities, and fortunately, we haven't any evidence of any of that. But you need to have at least a minimum of 4 people.
Okay, well, okay,
Also, to go back to the consultants with my department as an example, we're paying our auditors for 4 audits in 1 fiscal year. Well, next year, that number is going to go down to 1 audit. And also the other consultant we have, Krish, we're not going to use them next year. So next year, the finance budget is going to go down about $140,000 just with those 2 actions alone.
yeah, so in response to the number growing from 16 to 20, well, we have 3.6 of it right there,
Yeah.
or
Well, I think-
3.4.
I don't think the plan is to go to 20 anymore.
No, we're eliminating 2 positions.
So it's 18 roughly.
Right.
But anyway, so at the benefit is there's more information for the town, and it looks like a lot of people are accessing that information, but there is
Right.
headcount.
But
There's cost.
we had 2 people in the finance department from 1920, 2021, 21-22, and we're 4 years behind on our
Yeah.
audits.
Well, like I said, when it was just Excel spreadsheets, it was
Right.
Stacy, yeah, not even full time,
Right,
but that was a different time. I
right.
guess.
Plus the GASB pronouncements, there's a lot more requirements that we have to do.
Okay, and in terms of the sheriff's contract, as part of our research on the Charter City proposal, I watched the Los Altos Hills meeting, and one of their reasons for becoming a charter city and then having the real property transfer tax is I believe they use Santa Clara County Sheriff. And that was their big thing. The sheriff's contract has grown. So I'm saying that, we're not going to solve the problem by everyone has this issue. And the other historical data point, many years ago, the finance committee was shocked when we would get this COPS funding from the state. And at one time, believe it or not, the COPS funding offset our sheriff's contract. And then the year it went to like, oh my God, the sheriff's contract is like 100,000 more than the COPS funding. It's like the finance committee in its ignorance said, well, we'll just reduce the number of, at that time, it was 1.5 shared with Woodside. And I think that it's roughly the equivalent of this 5.25. Basically, I mean, they're doing the head count differently, but, and so the first reaction of the finance committee was to say, well, let's just cut it back. We don't need to spend that much, 100,000 over cops funding. And I believe the town citizens and the town council fought back and said, no, we're gonna keep the same level of head count. So that's just, again, a historical data point. So, and to our credit, we're not talking about cutting, it doesn't sound like there's been any discussion about cutting back on coverage. So again, that's just data points for those of you who don't have the history I do.
Yeah, I think the sheriff used to cost us more on a variable margin, and now they're doing this full allocated cost recovery, including overhead and everything else. But
So I had an unrelated question, but Steve or Mark, this chart was in our package, but I don't know who's,
That's not, is that the yeah, that's not ours.
that's not yours. Okay.
We'll read out on that in the next.
yeah, it'll probably be in the next meeting. We're trying to do some sensitivity analysis on what if you adjust different things, what does it give you? And that was Chris's work. More expense comments?
I would just one last comment on the sheriff point. So one of I didn't know really how much we spent on the sheriff before I started this exercise, and I was surprised that it was as much as 1.8 million, because like Bill, frankly, I haven't really, they're not really visible in our town. I've lived here 9 years. I really haven't seen them. So it struck me as, oh, that seems like an awful lot, at least from my perception. But one of the other points of comparison, it's not in the chart in our memo, but the one close town that is not that much bigger than Portola Valley that does have their own police force is Atherton. Atherton is budgeted for this upcoming, or the current fiscal year in which we're in, $9.5 million for their police force. I mean, it is orders of magnitude more than what we have. Now, it is true, and I don't really know how this works with the county of San Mateo. Now, they get more back in their property taxes back to Atherton, because Atherton also has a very small commercial base, just like we do. So the vast majority of their funding comes from parcel taxes or actually real estate taxes. They have materially more taxes coming back to them from the county than we do. I'm guessing, this is my conjecture, that it is at least in part due to their having their own police force. So that's just that we didn't include that in the memo, but to the extent that that was, if anyone was wondering, well, what might our own police force look like? At least that's the closest point of comparison nearby.
Yeah, that's helpful. I can't shake the suspicion that we're paying twice for our sheriff, but without an alternative, I don't know what we can do. Councilmember Taylor.
So I just had a couple of questions. On your per resident expense, is that how much we're currently paying the sheriff? Because those numbers look sort of roughly equal, but when this thing becomes fully burdened, it's going to
Be
be.
higher. Yeah,
Higher,
it'll be
it's gonna be
higher.
higher.
than
Yeah.
fully burdened.
So this
Yep.
is
This is the
using the current
Yeah,
numbers.
the one.
Yeah.
versus the
Because I'm wondering if that maybe is a leverage point where we say, look, these other people are paying this and our
Sure.
fully burdened cost is, I don't know if it's double, but it's significantly higher.
Absolutely.
So, okay. And then the other thing is, and I know this is difficult to do, but trying to capture the sort of unfunded future expenses that are going to get mandated from the state. I mean, we know there's another housing element coming up. We know there's the safety element. I mean, we know that there's things that are there. And so I think some of this analysis of like, oh, well, do we need all these consultants? I think if you don't sort of look ahead and say, well, we've got these expenses that are coming up and we're not going to do them with staff, you got to build that into your model. And I realize it won't be precise, but there are probably some big ones that we know that are coming. And I think it would be useful, again, as this track moves forward, is to try to capture the ones that we know about.
Sure, absolutely.
And again, I know that's not, it's not an easy problem to solve. And then the last one is, are you guys working on the percentage of property taxes that we get? Because I think we get, if not the lowest, we're very close to the bottom of all the municipalities in the county in terms of what we get as a percentage of our property tax. Have we ever gotten to the bottom of why we get so little?
Craig, I have spent hours and hours at 555 Government Center, Redwood City, trying to get to, and now what we do have is we have our outside consultant with that, who gets that information, but wanted to try to validate that and independently assess it. And we were trying to get it in time for this meeting right here. It's actually really my first time really trying to get this type of information out of the county offices. So we've gone from the assessor's office up to the controller's office, down to the treasurer's office, going over to the tax collector's office, back to the assessor, back up to controller. We keep on going around and around and around. Honestly, it's frankly very frustrating, but the answer is no, but that's not through lack of trying.
So I'm wondering if one of the things we need to do here, if you guys are sort of working it, is to actually work on the political angle as well, is go to one of our supervisors, county supervisors, to say, hey, you need to help these guys get the answer to their question. So maybe we could talk afterwards and see. I mean, I don't know if there's anything there, but I hear you. I certainly did it with our little road district, trying to track down why we got the money we did. And it was so Byzantine, I finally gave up. But this seems important enough that maybe we should pursue it to the end. So anyway, but thanks for your efforts.
No, Craig, I agree with you, because it's the single biggest source of our funding. I'd love to be able to, or we would love to get an independent validation with real data. We've been trying for weeks now, haven't been able to.
No, we have a consultant, Paula Cohn, who we paid to do this, and she gave us a long presentation.
Yeah, we have her
which
now.
was very
Yeah,
informative.
well,
But it was, as when I listened to it, it was, here's what you're getting. But my understanding is
Correct.
we're nominally supposed to get 6% and we're getting like 4%. And I
Yeah,
never
that's right.
understood. I mean,
Yeah.
2% of property tax is a pretty big deal. So
no, and actually,
yeah.
Craig, to your point, okay, we've actually looked at data scrapers, AI data scrapers for all of these jurisdictions within County of San Mateo. As best I can tell, we are the single lowest percentage. But again, and it wasn't reconciling, even those data scrapers were not reconciling to the consultant. So that's why we did not want to rely strictly on the consultant. We wanted to go to the source of the data. The source of the data is the tax collector, Sandy Arnott's office, to whom we all pay our property taxes, but we've not been able to get the data out.
And Paula Cones, she gave a good explanation back at our March meeting, which I would have to go watch again, because while she was talking, I thought I understood it all, but of course it all left my brain almost as quickly as she finished speaking on all these bizarre exceptions that led to the minimum not applying to us and things being taken back, but then partially given back, but then taken back again. Chris here, though, prepared it's in the packet, the sensitivity analysis, which showed that a 0.1% increment in our share of property taxes is worth rounding $70,000. So, 1% would be $700,000, and with modest other adjustments, okay, our problems are over, right? So that was there provided to give everyone a sense for when you look at the political lift and not only the fairness of adjusting taxes or what have you, what about all the taxes that are already being paid, and a sense of equity given other communities versus us.
And actually, that data point, actually, so we backed into the same number. That's exactly right. And as best we can tell, that's actually what Woodside gets. And actually, Woodside has very similar demographics. And they also share the sheriff's contract. They seem to get that full 1% more is material, and it would fund the gap.
Yeah.
Woodside seems to get it, and why we don't know.
Right. And one potential argument for that is that, wait a minute, okay, the sheriff's department is now fully allocating overhead and not giving us the free ride they would postulate that they used to. All right. Similarly, we'd like to get the full share of taxes back that we had been foregoing in the past as well. Right. Because that way the money is just making a round trip back to the sheriff's office anyway.
So can we make that actionable though, Craig, to get help from
Yeah, I mean, I don't want to derail today's meeting, but you know, Mark, if you want to grab me sometime after the meeting, yeah, I mean, I can certainly get us a meeting with the supervisor, one of the county
That'd be
supervisors.
great, because I know Mark personally has gone out and spent his time.
Right, no,
To
yeah,
do this,
yeah.
and, you know, some air cover would probably help. right, Mark?
absolutely, and I'd be happy to provide that.
Yeah, and just to repeat myself again, given the sheriff is, the status quo was upset. You know, we got a low percentage, but everything was okay. As mentioned, we had more than 60% in reserves and every year it seemed to work out. So, all right, why stress about it? The sheriff has reconfigured how they're doing things. Oh, wait a minute. That may work for Woodside. It doesn't work for us. And why do we get so much less money than Woodside when we're very similar places? In fact, we were almost one town at one point way back before Portola Valley was founded separately.
So one reason that we get different numbers, we are a TEA, which I think stands for tax equity
Equity allocation.
allocation, which means we're supposed to get 7%, which was a good thing. But then they came up with this ERAF, which is an educational allocation of property taxes. And so we get 7% minus the ERAF, and that brings us down to a
Then
fairly
we also
low
get
number.
BLF as well.
So I suspect that the reason, the political action to this is not to go to the county, but to go to the state. And you should go to Josh Becker, whomever is our state representative here, to see whether or not TEA came about because some Southern California cities felt that they weren't getting the appropriate amount of property taxes back.
Well, I'd certainly need a lot more education and I would be happy to try to set a meeting with Josh Becker. I mean, I think we could do that, but I don't know how much leverage we're going to get with him. But anyway, Mark, whoever the right people is, I mean, just after the meeting, let's meet, let's see if we can brainstorm, you know, the different ways we can go about this. And then, yeah, we're going to have to educate ourselves so we can really go in well educated on exactly, I mean, if we're getting screwed, how are we getting screwed? You know, what are we asking for? Because that's, right now, it's not clear to me what we're asking for. It does feel like there's an injustice here, but, you know, until we can sort of point to the exact, this isn't right, it's going to be hard to get our representatives to do a lot more. At the county level, I think we can at least get the tax collector to say, you just need to explain this to us, like in detail. It's up to you to tell us why Portola Valley is different than Woodside. Like it's your job. It's not our job to ask you 500 questions. It's your job to give us a report back. I think we have enough, you know, political clout to get that. I'm not a guarantee, but I'm at least willing to, you know, make that run. Doing it at the state Senate level, I'll do it, but I don't know if I'm going to get traction there.
Great. I think that's worth pursuing. When I think of immediate ways to affect our revenue curve, just really nailing that down is well worth the effort. First of all, to understand why we're treated so differently. And secondly, if we could increase the share there, those are taxes people are already paying that are just going somewhere else. And that would really help. Other comments on the expense front here? Yeah.
And do you know, I mean, this, you're saying it was TEA, is that, did I get is it possible to change that? I mean, we're talking about charter cities and all the rest of this stuff. I mean, is that another one of our
So
options?
TEA was a good thing. We got a lot of money back from the county when we discovered that we weren't being treated as a TEA.
Okay,
There were 4 cities in San Mateo County, which was the only county that didn't implement TEA back whenever this was, a few years ago.
but like is Woodside TEA?
No, I don't believe so. It was Half Moon Bay, Colma, and somebody else.
Okay, well, maybe we can look at them as well and understand where
Well,
we
Paula
are.
Cone knows all about this.
Sure,
so
yeah, and I remember her mentioning that
we
stuff,
paid
yeah,
her.
yeah.
Yeah, we have a contract with her. So this is, having just said we should never talk to consultants, maybe with the exception of Paula.
Start
I
getting
think
paid.
that she's a good person to talk to.
We-
Actually, Sharif.
Yeah,
Sharif
we
tried
were,
to
we
get
were
it set
trying to
up.
get her back in, but she's booked all the way through November.
Right.
So, yeah. We do.
So, Mark, tell me if you agree with this, but to put a finer point on it, we were tasked with coming up with a menu of options that this town council could consider. I think clearly staffing is one. There's probably not a lot of room there. And I think there's been some effort already. The sheriff contract is something that I think, again, ideally we could make some marginal improvements on. It's probably not going to be a dramatic movement. But then I think the planning and building area that I think Sharif mentioned earlier, I think that's where the most meaningful near-term impact could come.
Any more discussion from the committee before I open it to pub? Okay, David Cardinal.
Well, thanks. This will be a little longer than my last comment, I think. First of all, it was supposed to be about expenses, but in terms of property taxes, the more we can get, the better. On the sheriff's contract negotiation, I honestly don't think anything I've heard tonight reflects the reality of how that worked. So I'm happy to have a longer discussion, but the FTEs and all that stuff, I didn't hear anybody who actually understood how that works. So in terms of the expense reduction, I read the report. I think it's really well-meaning. It's great from a standing start. I know there are new committee members. There's a lot of the obvious tactics you want to do in the turnaround, but I think we need to take into account how different municipal governments are from corporations. So specifically on staff and salaries, I think pegging staff levels to a decade ago without an analysis of our current needs is kind of not appropriate. We have like 700 more laws in California. We have fire codes, we have all this stuff. So I think we need to deal with what that means. Also, I don't ever remember in running a company or a nonprofit where we looked at the CPI to gauge salaries. We always looked at salary surveys, which I know Sharif and his team do. So the question is, how much do we have to pay to get people to work here? Not, how much were they paid 10 years ago? So I think that's important. Consultants, I'm a little confused. These aren't like the typical fire them first, McKinsey, Bain, BCG people who work for the CEO are going to make life better. We have a combination of several different ones. The consultants, like the finance consultants that are helping Sharif work on the books, or Paula Combs, or helping this. We have contractors who we are paying to help us with the town housing element, and we have contractors who we pay and get reimbursed for, like the planning permit plan checkers and the inspection people. So we have to decide what they want to do. Now, on the sheriff contract, I think that was a little bit Alice in Wonderland, and here's why. First of all, nobody wants to do public safety that's any good. So they're not going to bid. It's really hard to hire public safety officers, and nobody wants to take on more responsibility. So here's the deal. San Mateo Sheriff, it's an open book. You can tell what they pay, because they pay, and now they've got, public sector unions, and people have a hard time working in our area because housing is expensive and they have to move from the East Bay, and you can find all that out. So they pay a certain amount, and we want to currently hire one full-time equivalent, which means roughly-ish one person here all the time. Now, to be clear, what we get for part of that, first of all, we are entirely surrounded by San Mateo Sheriff. We are not next to Menlo Park. The sheriff takes care of Ladera, they take care of Los Trancas Woods, they take care of Woodside, they take care of Vista Verde. So they surround us, which is cool. And they provide those services, and we get the detectives and the dogs and everybody else, the forensic lab, the community service officers, the mental health officers. So we can absolutely buy less, but that's our call. That's more or less like, here's the deal. If we want this one full-time equivalent, if you will, 1 24/7, which is only 40 hours plus overtime and all this, it's like 5-ish people that need to do 24/7/7. And that's what we pay for. And we can decide to pay less, but there's nobody else on the planet other than like Woodside Patrol, I guess, who could offer us non-sworn officers that's going to want to do that. So that's, it's not like a waste disposal contract, I guess. So thanks. Hopefully that's at least some food for thought. Thank you.
It is. Thank you very much, David. Caroline?
Great, thank you. So the finance commissioners, thank you so much for this report. I share your frustration. We pay all these taxes to all these government agencies, and we don't get any answers. I really appreciate Councilmember Taylor's suggestion, which we, the residents, have asked for so many years. Get our elected here and have a real discussion, because we haven't seen them. We need to express what is really going on. It's not just the sheriff's contract, it's the housing. You know, ACD has not an inventory of all the housing they have, and who is this going to be for? There's so many discussions that are not happening, and that's why there's the disconnect. In regards to the sheriff's contract, as the mayor said, we have now a police commissioner, Kevin Welsh, and an assistant, Ed Holland. They're both the chair and a committee member of BPTS. We're now waiting to see what their purview is. Finally, I think the town has put the contract on, and it's very vague. I know that the previous contract that our sheriff did not fulfill the services that she promised to. And when you compare, when you say that we have a 5.25, no, it doesn't. We share one deputy with Woodside, and we have then these community officers, and we share them with the whole district. So you can look at the PPTS minutes. We try to be as transparent as possible. Look what they come up with. They're not here all the time in Portola Valley, and definitely this contract should be renegotiated because we don't get the services. We don't need the services. That's one thing. And then the other thing is on housing. Please calculate that. That's a big chunk of our deficit. All these consultants and all these nonprofit organizations that get jobs through this, we really need to sit down and see what this is going to be in the future. So yeah, let's get our representatives and let them know what is happening with all their politics and their policies. It's not working. So thank you.
Thank you for your comment. Karen Askey?
Hi, can you hear me?
We can.
Hello, hello. Well, I want to tell you that I think that this has been, there's been a lot of great thoughts. I think there's been a lot of great questions, and I think it's been a great discussion. And I really, really appreciate all the work and time that you guys are putting into this. I wish there were more residents here to hear this, because I think these are all very important issues. And I'm behind you guys all the way. And I think this is also a way that we create greater transparency on these issues in Portola Valley, and make sure that what is going on at the council level or the staff level is also that the residents are aware of it. So I just wanted to say thank you for that. A couple of specific comments. One about the sheriff's contract. We know what we're contracting for, but I guess my question is, can we get some sort of accountability and a report back that tells us how the sheriff's office is meeting that commitment that they made to us under contract? They tell us what they're going to do, but I don't think we get a report back that shows us what they've actually done and how that equates to the 5.25 FTEs. And the last thing is, as you guys move forward and look at consultants and housing, I think we have a wonderful number of really strong minds in town and great expertise, such as you guys on the finance committee. And we need to figure out how to utilize our residents more. we have skin in the game, and we can certainly help with a lot of these things. And I would encourage that the Planning Commission and the ASCC be a lot more involved in the next round of the housing development than they were this time, which was basically non-existent until the very end. And yet these are the residents of the town that know our history and our codes and everything else. So again, thanks again. I really appreciate everything you're doing.
Thank you, Karen. Anyone else? Okay, moving on. In the spirit of not keeping everyone here too long, I think we'll wind the meeting up if there's no objection in a few minutes. I just want to tick through a couple of items that I don't think we'll have to discuss very much. I could be surprised, but if you recall, we established working groups to look at the following 6 categories, and that's expense reduction, number 1. That's what you start with before you look at more complicated things, or certainly raising taxes. Annexation was another one, selling land, the utility user tax, parcel tax, and charter town. Those are all, the latter part there are big topics, so we won't really get to that. I think I would like to just throw out to the committee that I would recommend dispensing with serious time consideration spent on annexation or selling land. The first point, simply because annexing another town is, we think it's politically complicated just to get a report on our property taxes from convincing Ladera or someone else to become part of our wonderfully functional town with, audit still and everything else. I mean, I just don't even want to go there. And I, to be realistic, I don't think that would address our needs in any immediate way. It would change the character of the town, and it wouldn't really address the revenue issues that we got. The second thing is that selling land sounded good because we may have little parcels of surplus land that aren't really buildable that could be bought by adjacent neighbors, and that sounded like a really good thing. But then someone, I think it was Betsy Morgenthaler, pointed out the Surplus Land Act to us at the last meeting. And after digging into that, the state has made it all but impossible for municipalities to dispose of land that they don't need by selling it to other folks. And the notion is that we need affordable housing, and if you own land, you should develop it for affordable housing is the notion. So I don't think that's going to help. So I'd like to just open those two for very brief discussion if anyone wants to. But I would recommend that we not seriously consider that, and that we focus the next meeting on user utility tax, parcel tax, and charter town reports. Okay, that's good. And David, I see you have your hand up again. Is that a new comment?
Yes, it is. Actually, I get that it's not tactical for the finance committee, but I think the annexation issue is potentially a very important long-term issue.
Okay.
I didn't know anything about it until Carter Orr woke me up to it. And his thought was, if we annexed Ladera and Webb Ranch, which is 400 acres of not quite open space, but farmland, we would have a huge ability to do low-cost housing, entertainment, whatever, a real city center. And I thought that was really cool. And it's not as impossible as it sounds. It's not short-term. It's not something that, I mean, Ladera obviously may or may not want to go along. But I think if we could do it, it's totally worth consideration by someone, whether it's the finance committee or town long-term planning committee, or it struck me as a very creative idea that would solve a lot of our issues. So I don't want to take that totally off the table. Thank you.
Okay, thanks for that. And I can see that. I'm trying to narrow what we're doing for the immediate financial thing that we have going on. If we think back to the April, I think it was study session that Sharif chaired, he had mused that, if we were to annex Ladera, you could have a boutique hotel over there, and that would have all kinds of revenue opportunity. And that's true, but I I don't see how we get anything like that fully done and generating revenue for 5, 6, 7 years. And that's, as my old professors used to say, beyond the scope of this course. So I was hoping maybe we can table that here.
Sure enough, as long as we don't say we're tabling it forever, just that
Oh,
it's
no.
outside the scope of what we're doing here.
No, and of course, as everyone knows, and I like to emphasize, we have no authority to do anything here. I'm just speaking into a microphone in a sort of official looking chair, but the town council sets the policy, the staff does the work, and we just pontificate. Anyone, do I hear a motion to adjourn?
Motion to adjourn.
Second? Second. We are adjourned at 6:30. Thank you, everyone. Appreciate it.